Joining us now to break this down is economic futurist Andrew Bush. So, Andrew, explain why we're seeing the cost of home ownership go up so significantly. I mean, what is causing this, and how has the pandemic played a role?
Yeah, for years we've been watching the housing market and wondering when millennials would start to buy, and they've held off for a long time. They stayed in the major cities and they did not want to move out to the suburbs. But COVID changed all of that, and it accelerated at a just unbelievable pace the demand for that cohort to go out and buy homes. So that's the first thing, and obviously that's driven by COVID. Then we have record low interest rates, and then we also have a huge amount of stimulus from the U.S. government to really get the economy back and going. So those three things have really driven demand for housing just outside of the cities.
How does this impact the average American or Brit, especially when it comes to the fact that Wall Street and investment firms are now investing and they're buying up these houses?
Yeah, in a normal market, their investment probably wouldn't make that big of an impact. But because there's so much demand right now, you take that amount of housing out and you really start to create conditions where prices soar. And that's really what we've seen. We've seen record price appreciation in the United States. And for the first-time home buyers, it makes it really tough for them to get a house that they can afford. It's now somewhere between 4 to 4.5 times their median income. And I think in the UK, it's over 8 times their median income to get that first house. So a lot of them are getting priced out.
Absolutely. Now, when it comes to the numbers of homes being bought this year specifically, how many homes are we seeing investment firms and Wall Street banks buy up? What portion of the market is that?
Yeah, it's hard to say right now. Some of the initial studies going back to 2020 show that it's 2% of the homes that are available for sale, but another study showed it was 25% in the first quarter. So what's happening is these institutions, these investment firms, are starved for returns because of record low interest rates. And if they can get almost 7% return on rentals of these single family homes, that is far above what they can get in other multifamily units that are available.
Right. So we're looking at a situation where not only are housing prices in terms of purchasing a home, you're seeing those prices go up, but you're also seeing the potential for rent itself to go up as well. I mean, what kind of effect could we see? What does it mean, basically, that your landlord would be a Wall Street bank or an investment firm?
Yeah, this is a really interesting debate about this, because there's been a lot of discussion about whether these big banks and big pension funds would be better landlords than other private investors or privately held property. And so there's this big debate going on. And, the pensions say that they have more money, they'll do a better job. Some of the people that own those, or some of the people that rent there, have formed their own Facebook channels and pages, and where there's a lot of complaints that come up. But I have to tell you, I've rented myself over the years, and I will say that there's both good, and bad landlords, and it doesn't matter necessarily if you're a pension fund or a private investor. You can get bad ones either way you go. But that's the question right now. We're not quite sure how it's going to play out. It seems to be it's another layer of being removed from the people that actually do the maintenance on your rental that I think has a lot of people concerned about what's going on there.
All right. Well, Andrew, I'd like to thank you for joining us and breaking that down. Obviously fascinating and a bit terrifying for all of those of us who want to be able to afford a home to just rent or buy. But